Hello everybody and welcome back to another video. Have you ever wondered why sometimes everyone can get hyped about a stock but it just doesn't move, or sometimes it just actually goes down? Well, this is some of the manipulation that goes on in Wall Street, and we'll be talking about some of this and more throughout today's video. There's a lot to unpack and heaps of good information to help you guys out. Stay tuned. Alright guys, well here begins our market recap for the markets closed 24th of August 2021, and I don't think you can get too much from the heat map today, so why don't we just go straight into the indices. IWM, Russell 2000 performing the best, the smaller caps did the best in the session. Then we had Nasdaq, S&P 500 and Dow Jones all really showing a bit of weakness into the close, while the Russell kind of held better. And this just shows Wall Street was taking a little bit of profits maybe after the previous sessions of gains. It was a big recovery, of course, off that 50 exponential moving average. And we'll be taking a look at that and more on the S&P 500, gold, Bitcoin, Tesla, and others throughout today's video. Let's move through all of these sectors. All of the defensive sectors were down. Energy, XLY, XLF, all of these kind of value or growth sectors were moving through here. And that's a good news for market bulls. That's what you want to see. You want to see Wall Street dumping all of the defensive utilities, the defensive kind of stocks, because if they do that, then it tends to mean that they are really thinking about moving towards the growth side. So that is good news if you're a bull in the market at the moment. After the close Wednesday, we will have some big earnings. We're still in earnings season. We've got Snowflake and Salesforce, both two to be looking at. Some other big names coming through as well, Splunk, Box, and some others. So if you're trading any of these or you're invested in them, you always want to be well aware of when these earnings results come out. But straight away, let's get into some of this actionable data and the TA that we've been covering here on the channel for the last couple of days. So we'll start off with the dollar index. Now, many of you would know that the dollar index has been bulling recently. And the stronger the dollar index gets, the more you have that tendency to think risk off in the markets. Money is flowing out of the stock markets, potentially into safe havens. Bonds usually go up. And at the same time, you tend to have a movement into DXY showing strength. So let's get down to the 2-hour chart here and have a quick look at the actual price action. So it's come down to this little trend line. We did highlight this in a box. We're looking, of course, for any kind of direction. We've got enough news now so we can pretty much put down the lines and put down the levels that we're going to be looking at for strength or for weakness. Now, for the dollar index, I want that dollar index above this resistance for it to be showing strength. If you're trading gold, it's going to be incredibly important that if the dollar index gets above here and closes on a significant time frame, what that's really going to be telling you is it's getting ready to resurge back. And if it is going up, it usually puts pressure on gold. If you're going gold long, where do you want the dollar index? Underneath 92.80. If it closes underneath here, it could be some very good long trades for gold. And I'll show you guys what I mean right now. Remember, they're all interconnected markets. And when you start to understand that, it gets a little bit easier to trade. So gold, straight back down to the point of 17.95. We've got that strengthening dollar index at the moment off that support, and this is putting pressure on the gold trade. Notice previous resistances become supports. So because of the speed at which this has declined, it's not like it's going 2 steps down, 1 step back, 2 steps down, 1 step back, and we can kind of predict it a bit easier. Because of the speed, because we know it recently bounced off the 50, we're going to do a very similar thing to what we did on the other one. And that is, we're basically going to bring a box over. We're going to need to box the area that we're interested in, which is where it is currently. And what we're looking for here is we're looking for lightning bolt situations. We're looking for, again, double bottom style situations on the smaller time frames. All of this stuff counts a lot to making better informed decisions in the market. We've got a 200 4-hour here, the green line, SMA, and we've got a 20 exponential. So this is the right zone for gold to find that strength. But at the same time, we need DXY ideally, so the dollar index to weaken, so the gold can really push up against the dollar index. That's what we want. We want gold strong, dollar index weak if you're taking the long side of this trade. So be careful here, guys. We're looking for the turnaround. Follow the DXY if you like gold and silver, and these are going to be the important levels. This is right here, right now for this particular pair. Speaking of really big strength, we've seen US black gold, so US oil, coming through here and hitting the daily 20 moving average. So it busted through that resistance yesterday. We did warn of the risks of something that goes up so quickly. Remember, it's like catching the falling knife backwards. If you're trying to sell it, it's too much. And now that it's significantly closed above this zone, I'm actually looking for a pullback back to the $65 range, $65.20. And ideally, we get a swing to the long side. Looks good here for US oil. That's how fast a trader has to make decision changes, because you don't really know exactly what's going to happen over the longer term. Remember, oil doesn't really have a fair price. It just has a huge amount of manipulation in between prices based on OPEC, based on demand, supply, all of these types of things. So if we're thinking about it pulling back here, do we expect a little bit of a bounce around this level? Yes, this is where buyer demand should come back in. And if it does come back down to this level, depending on its speed, we could start to scale in. We could start to do what the big banks do. Look for reasons that it is going long. Look for that momentum and then get into the trade towards the long side. It's looking much better than it was only a few days ago. It hit our first TP down here. You can see that massive sell-off that occurred. Great trade. Very difficult to sell it here. I told you guys why. And then now that it's broken through and closed above, we're looking at 65 and then hopefully doing the reversals. Let's move over to Tesla. So a lot of people hyped on Tesla. Obviously, this was trending yesterday. People were trading, and I can show you how you can tell people were trading, but we still remain stuck in the middle of the range. We basically didn't hit 700, which is a bit of a shame. We didn't hit the top 727. We stayed in the middle of nowhere. And there's two reasons why this is, and I can tell you it's pretty much Wall Street manipulation at its finest. So we've got the beautiful trend line. We'll continue to have that on our charts. We've got our 727 where I think Wall Street can't hold it down if it does close above this and we move towards that 750, 780 range. I'm excited if that occurs. But we've still got that 700 potential as well for a little bit of a bounce. So it's coiling at this stage, looking for its next move on the smaller timeframes. So what happened yesterday? Well, firstly, let's look at the manipulation. So this is an algo flow for stock price for Tesla throughout the last session. Effectively, it shows that the Wall Street bets, or no, not the Wall Street bets, the Wall Street bots is what I was meant to say, were literally not going with the crowd. They were selling, they were showing negative flow, trying to suppress that price for Tesla. Now, this can be taken, if you want a 7-day free trial, look at the links below, and you can get all of this data real time from our private community, along with all the other things we offer. So if you want a 7-day trial, you can go check that out. But basically, the algo flow versus stock price for Tesla. Look at this. Negative algo flow throughout the day. Obviously, price staying kind of sideways. Then you look and you have a quick checkout of the Tesla flow heat map. And what you'll notice is that there was pretty large amount of calls still around this position. 710, 715, 720, and now a huge stack on 700 in the future in 17th of the 9th. So there's some big flows here coming into Tesla. Now, I could go into seasonality, but I can tell you Tesla actually has strange seasonality right now. Usually around that October, late November period is when Tesla tends to shine in the market. That's when it has those really big gains. But I also shared a chart here on the Twitters today, and you'll notice what happened yesterday was a huge amount of buying calls. And I would tend to say this is retail buying these calls. Look at the amount of people purchasing it through. And the easiest way to tell whether it's retail or not is really just go straight into hype equity, stock twits, Wall Street bets, etc., and seeing what everyone's placing. If they're all placing trades on Tesla, if Tesla is, ranking up highly, those types of things, then it does tend to really show you that the retail traders are the ones mostly buying these positions, and Wall Street's trying to suppress, of course, to make sure that they don't have to pay out on those positions. We also saw some big moves through some other stocks, so we'll keep going here. Nvidia, nice movement out. Of course, it went to 220. That was our first take profit. Very similar scenario yesterday. Algo flow negative. Difficult for the stock to move up when you've got algo flow being negative, and Nvidia flow heat map still shows a huge amount of expiring calls on the 27th of this week. So of course, 27th of August. This is where ideally Wall Street would not let it get above this so they could collect all that sweet premium. Remember, it's in their best interest to use the stat, which is 70% of options expire worthless. So if that's true and they've got one big almighty level to look at, in general, they will try to suppress that level. Now, on the flip side, you might be saying, but Tom, what about AMC? What about GME? These things are going crazy. And yes, they are. Congratulations, guys. You got beautiful breakouts yesterday. But I will show you something of interest in a second. So not only is the hype real and the hype's back on AMC and GME, all of a sudden everyone's interested in them. You can see this big breakout here. But take a look at this algo flow. Actually, they were coming with you. Look at the price. The price preempted it, but then the algos came through, effectively covering up, I guess you would say, their positions. They were actually buying in too. So what an interesting event here that's occurring. We have price moving, algo flow positive, and the price was insane. So will it continue to run? Well, it all comes down to what are they really coming with you? A lot of people say, oh, well, we're wrecking on certain hedge funds, and you probably are when you do this. However, I don't believe that everybody is losing money in these AMC GME situations. A lot of the bots, a lot of Wall Street's positions will be going with you to make the cash, and then of course, taking the cash from you when they decide to crash it. So algo flow, again, can be used here just to preemptively say, okay, if this price on AMC is moving, is it real or is it fake? That's what we want to understand. In this case, it looks pretty damn good, doesn't it? The algo flow is coming with the price action. Very nice. Let's move over to the indices now and check out QQQ. Very cool. Beautiful trend line here. We've got our other trend line that's, of course, above this. And we're getting very, very close now to this first resistance zone. It's having a bit of a breather. At the time of recording of this video, futures are down, let's call it 0.1%, so negligible. But we'll continue to watch this session. If anything does come down, you would expect selling potentially down to this level, around 369. And at this point, you would probably expect Wall Street to try to come in, buy up that level. Also, buy the dip kind of investors to have a crack here. Be careful if it comes down incredibly quick and it's a giant red candle. Of course, unless you want to invest, this can be one of those traps where it's a falling knife and you catch it and it keeps going. If it comes down like this, then it might be a little bit safer. So it's all about the way in which something usually goes into the dip. You've got to decide, what are you doing? Are you trading? Are you investing? Exactly what are you looking for? For shorter time frame traders and investors, the key levels, you can see here, the 373. We put this in our live stream yesterday. And if we actually bring it down, look here. You've got the 50 exponential and this 15 minute. You've got the key level. So if 373 is reached, you would expect some intraday buyers to try to buy that level up. Now, is it the best level ever? No, but there is at least a support that's being found there, and you've got a resistance up here around the 375. Good luck to all in these positions. S&P 500, we've clearly stated to all the bears, you don't win, bear guys, until we get underneath the 50 exponential. That's unfortunately on the daily, but it's true. Look how many times now this thing's held. It's basically like a giant trend line here with a giant trend line top. As we know, we've got our trend line, our community trend line that goes through all these previous peaks. It's insane. It's been very good at predicting realistically all of the pullbacks. And at this stage, there's nothing price action wise that's telling us that the S&P 500 or the Nasdaq are going down. We had that movement down. We hit the 50 in the futures market. We bounced straight away. It was a massive rally. And all you're really hoping for if you're a bear right now in the markets is that it was a blow off, this is a fake out, and that it does end up coming down into the seasonal September weakness. IWM, on the other hand, is getting closer to that resistance in the middle of the range. 224, 225 is the key kind of resistance take. I assume people will take profit here. Big rally, 212 to 220 is not too bad on this index. Around this level is where I expect sellers to come back in, and nothing really else notable from there. Bitcoin, if we take a look at Bitcoin, it's on support as well. 48,000 or just underneath was reached. This is the level where initial buyers should come back into Bitcoin. If we take a look at this stage, it's formed a little bit of a base. It's got a little bit of resistance at this 48 kind of 4 level. If you're a intraday style trader, this is a zone that I'm sure you're looking at for closure aboves, taking it into 49 at that point or even higher. But if it gets underneath this low again, guess where you're going, guys? 46. And 46 is a super level because daily 200 and daily 20. Look at it. It's like intersecting together. Beautiful level here. Wouldn't mind for it to come back down there. And as always, all you're doing with BTC or the crypto market right now to show whether there's something afoot is checking out BTC shorts. If the nasty whales are getting into shorts, you've got to pay attention. A lot of people doubted the whales over here, but guess who won? the nasty whales. It's like nasty Wall Street, except in the crypto world. Nasty giant whales attacking you. Literally, you're the krill and you're getting destroyed by the whale. So you got to swim away from the whales when they come into the harbor. All right, guys. Thank you very much. I hope you enjoyed the video. If you did, please give us a massive thumbs up. Hit that alert button wherever it is to come and join us for the live streams 1 hour before the New York Open. And as always, subscribe if you enjoy the content. Bye for now, guys, and good luck.